Hello, hello, and welcome everyone to Scaling Generosity, a financial framework to grow your giving. We're going to give everyone just a minute to log on and join us. The good news is I am watching the chat and I would love for everyone to participate and say hello. So if you're up for it, go ahead and drop a message in the chat saying hello and letting us know where you are from. My name is Karen Houghton, and you'll get to know me over the next hour, but I am coming from Atlanta, Georgia. All right. Hey, Lauren, we got another Georgian here. New Orleans. We got some clients in New Orleans. Awesome. Ooh, Louisville, Kentucky. Hello, Mary Catherine. Wonderful. As folks are going, I see some folks typing. It is me, and I think we had 150 or so folks RSVP. So as we get going, I would love for you all to participate as much as possible. We are going to be keeping an eye on the chat. I believe the recording will be shared after it ends. And then, if you participate, we're going to choose somebody from the chat to win a book and some swag from Infinite Giving. So we're going to motivate you a little bit to throw some love in the chat as we go through and spend our time together today. So glad everyone is here. Again, Scaling Generosity is a financial framework to grow your giving. And we're going to go ahead and dig in together. So first off, my name is Karen Houghton. I am a nonprofit investment advisor and a CEO of Infinite Giving. So Infinite Giving is a financial partner for nonprofits. We serve hundreds of nonprofits all over the US in a fiduciary capacity. I'm also a board member and a former executive director. So I've done the fundraising. I've filed for the 501c3 and tried real hard to work with the board. I'm also the author of Funding Your Mission. So that's a book on modern nonprofit finance as well. So this is a world we live in, and excited to delve into it with you today. So why we're here. Our goal is to help you scale generosity. And it's really about a flywheel that we can create when we pair heart with that financial strategy. So a lot of what we're going to talk about today is non-cash capital, overcoming a scarcity mindset, whether that's us or maybe our board, really active capital stewardship, and then the dream, right? Sustainability. How do we get there? And we're going to talk through all of that today. So a lot of that is what the journey is, right? It's the journey of leveling up. And that journey that we're talking about is moving from scarcity to strategy, right? Because we can't get to sustainability without that strategy. And then, of course, the dream of sustainability. If you had to kind of pick one of these places where you currently are, whether you're in a scarcity mindset, a strategic mindset, or, looking at sustainability and seeking that, drop in the chat and let me know where you think your organization currently is on this journey of leveling up. Strategy. Awesome. Great, Kim. Then we're glad you're here. Another strategy from Samantha. Wonderful. Well, this is the perfect timing. Perfect. Lots of strategy, folks. So this is what we're going to delve into, but we want to make sure we're setting the table of where we are. Great. I see that as well, Rachel. All right. So this is where we all started. So it sounds like a lot of us are already moving through it, but scarcity is where everybody begins. And some of us just get stuck here a little longer than we would prefer. But scarcity is when we're in survival mode. Scarcity is reactive. It's when we can't afford to becomes the default language. There's generally a reluctance to invest in infrastructure, in staff. A lot of us experience that burnout culture because nonprofits are always expecting more with less. And of course, ultimately, it's avoiding strategic risk because we often have a fear of failure. Now, where that scarcity mindset comes from, right? A lot of this comes from the overhead myth. If you haven't heard about this, you've lived it, right? It's that mistaken belief that a nonprofit's worth is judged by how little it spends on administration and fundraising. It really was coined way back in 2013. If you remember a lot of the Susan G. Komen pushback that occurred, there was actually a campaign that was put together by GuideStar and Charity Navigator that really challenged a lot of that uprising and pushback that occurred with the Susan G. Komen organization to challenge donors to look beyond that overhead ratio and focus on the outcomes and impact instead. Right? But this is where a lot of that scarcity mindset, when it's like, ooh, are we allowed to do this? Can we have money? Should we get paid more? Is that all right? But in reality, underinvesting in our people, our systems, and our infrastructure is really what limits impact, right? It takes money to create money. And so this is where a lot of that scarcity mindset kind of has residual beginnings started way back here. So here's a quick reflection. If you want to drop it in the chat, you can think to yourself, or of course we love participation, but if businesses are expected to operate with overhead and responsible margin, why do you think we expect nonprofits to be different? The reality is we have people we have to pay, we have rent. There is the cost of doing either ministry, nonprofit work, community work. There's always a cost there, yet we seem to often be stuck in this place of burden where we can't have more. So this is something that a lot of us struggle with. But the reality is nonprofits are a business, right? Technically, it's a corporation. It's just a tax exempt, right, status when we think about it. And it's also mission oriented, right? So there are differences in there, but I think we have to give ourselves permission sometimes as a nonprofit to say, guess what? We also have like good business practices also apply here. So as we move from scarcity, then we move into strategy, right? And strategy is where a lot of you guys are. And that's where we get to be intentional. We actually have some control over this. And this is where we want to create a path to financial resilience. And it can empower you to lead with more clarity and confidence. And ultimately, having that strategy can build a culture of generosity that's not just driven by desperation, but by vision. And if you don't believe me, there's actually a lot of studies that back this up too. So the US Trust study of high net worth philanthropy found that 69% of major donors say they're more likely to give to nonprofits that demonstrate strong leadership and clear financial strategy. That's a lot, right? 69% are saying this is what they want. Now, there's always going to be a donor, right, who's on the other side and it's like, wait, you can't have funds, everything in and out, but that's just not reasonable. And the good news is the majority of major donors disagree with them and say, hey, this is what we want. Dr. Russell James, he's a professor down at Texas Tech. He's a good friend of ours. Also found that perceived financial health significantly increases donor trust and generosity, particularly among high capacity donors. So again, when we're thinking about strategy, it's okay, this is what we have. And lastly, the Fundraising Effectiveness Project found that donor retention is consistently higher among organizations that show stability, transparency, and a long-term plan. So when we're working out of that scarcity mindset and those immediate like, oh, help, we have to keep the lights on, those work sometimes, but as we all know, we can't continue. That's not sustainable. Those don't always work. Donors get tired, just like we do. And so that's the idea of making sure that we remember that that financial sustainability is what attracts donors. So that's a framework that we have to always continually tell, right? Anybody in nonprofit world is an amazing storyteller. That should be one of your greatest gifts. So how do we frame it and tell this story of financial sustainability in a way that says, hey, this is continuity for our projects and the work that we're doing? Which leads us to this sustainability, right? This is the dream. And I always want to clarify that, particularly when we're talking about nonprofit finance, this isn't about just sitting on hordes of money with no purpose, right? It's all about intentionality. That's why we put strategy before sustainability. But what it does is it relieves a little bit of the stress and allows readiness. So it's not about having excess, but enough to serve with excellence, enough to grow without fear, and enough to say yes to the opportunities that align with your mission. So when we think about moving from scarcity to strategy and sustainability, definitely take a moment and ask yourself, why is that important? Where do you as an organization currently fall? And why do you think it's important for you to kind of level up and move through this cycle? And if you think about it, I'd love for you to throw it in the chat, but there's a lot of reasons that we hear sometimes where it's just like from leaders, I'm tired. Like the donor that gave every year is tired of giving to us, or, it's this mindset where we're having burnout, right? Or we have strategy and we know where we want to go, but maybe our board is a bit behind. Or maybe the board's there and you're still worried about, well, how do I keep the lights on? How do we pay our people? So we really want to make sure that we're moving through this process. Yes, I like Rachel where you said it's like the political fundraising of the world's going to end tomorrow if you don't give today, right? It works until it doesn't. And so that's where we want everyone to start thinking long-term for sure. So great point, Rachel. All right. So what we're remembering as we're building this foundation, as we're digging into things, is that financial strength is mission strength. So having reserves and investments, talking to major donors about different types of asset givings, this is what protects the people and the programs. So instead of, I've had nonprofit leaders be embarrassed or like, ooh, but we don't want people to know this is on our balance sheet. And again, like they're taking their cues from you. So that's where it's like, oh no, that's just not excess funds. That is our emergency reserve so that if something happens or anything falls through, we can keep paying our people and keep the lights on, right? It all of a sudden, instead of being like, oh, we have too much, you're like, no, we have control over this. It's strategy. It's about sustainability and continuity for the people we serve. Because sometimes one of the things you want to ask yourself is, if you're doing really great work, but you show up and then you can't continue it, or you're in and out and it's unstable, are you doing more harm than good? Right? People want consistency. The people we serve, the work we do, consistency is almost always a very important part of showing up. And that's where reserve funds and things like this, and sometimes even endowments, can be about, hey, we're starting to think about not the next 1 month, 3 months, 6 months, but we're thinking about the next 1 year, 5 year, and 10 years. All right. So when we talk about the financial side, and then we're going to get into the giving side, this is a financial framework that I definitely want to break down, because when we think about how we scale generosity into this sustainability flywheel, it is a holistic approach, because they do all, remember the stats we had that was like, hey, here's what major donors want. Here's how we're thinking. All of these start to work together and can kind of feed into the next one. So the first one is diversified revenue streams, and we're going to talk about those. Developing new pathways for giving, and a lot of that is more in assets, right? Stocks, crypto, DAFs, how we think about endowments, things like that. So we have, how do we diversify revenue streams? How do we open up new different pathways for giving for our donors? And then, of course, looking at our financial management. Now, we say tiered investment strategy. For some of you, you're going to be like, oh, yes, we absolutely have investments. Here's what we're doing. Some of you may be sitting here being like, ooh, can we have investments? How does that fit? It's not for everybody, right? But here's how we think about it at Infinite Giving. So when we look at it, you have your operating cash flow, right? That's what's in your bank. That's your operating cash that you pay your bills, you do your programs out of. Outside of that, the first kind of cornerstone of financial sustainability is having a reserve fund. There's a lot of right ways to do things, but generally we recommend having at least 6 to 12 months of operational reserves set aside, right? Just like you would do for your family, that's a savings account, right? Just like we do for our households and ourselves. What if we lost a job? What if somebody got sick? How do we pay our rent? How do we buy food and take care of our kids, right? So in the nonprofit lens, this emergency reserve is that first step. If you don't have a healthy reserve fund, the reason I start here is that you're probably not in a place where we're talking to major donors, or we're talking about endowments, right? Because they're not going to know that you can take a large gift if you are still in a month-to-month scarcity mindset, right? And again, remember those stats that we went through. So these generous givers, the major donors, the big grant makers, right? They're often looking at, okay, well, how are they managing what they have? Are they working within their restricted resources? And what do they do if an emergency happens, if another COVID happens, if a grant gets cut? Have you been able to build up this short-term operational reserve fund? Once you've established that, you can move to the next. That's often more midterm, and that's where we can get, where we're starting to do big capital campaigns or maintenance funds. If you happen to own buildings or things that need maintenance, you need to plan for that. You need to put it aside, grant holdings, things like that. And then as you move past that, that's when you're ready to talk about long-term endowments, big legacy gifts, and things like that. And we talk about the sustainability flywheel because then you're looking at, again, those larger donors who are giving those larger gifts. They want to see the infrastructure. They want to see that, hey, this isn't like in a mode of desperation, that they're going to have a gift that can live and make an impact for sometimes even decades to come. So as we work through this, right, we're going to break these down really quick, but we're going to move beyond donations, right? So we talk about diversifying your revenue. You can have multiple revenue streams. Not everyone is so lucky, right? And there's different ways we want to think about it. And sometimes it takes a lot of creativity, but can you have earned income, right? There's an organization that I was talking to this morning, and they were about $1 million organization, and about $500,000 was brought in for revenue because they do soccer fields and soccer camps and things like that. So they had revenue, but then their budget was over $1 million. So they were fundraising about half and had revenue for about half. What a beautiful thing, right? That's not for everybody, but can you do memberships? Are there services? Can you sell things, training programs? How do we think about any type of earned income that can just supplement those donations, right? Membership models are a great avenue. A lot of associations will do this, or different access to things, right? And it's really, you want that recurring monthly income coming in. So membership models, strategic partnerships, you guys know this, corporations, local businesses. And then it's where it can get a little more interesting, and not everyone really utilizes this to the degree they can, but investment income. So take reserves, right? Say you have money sitting in a checking account. Well, you're not making anything on it. Okay, so then you move it to a bank savings account. All right, say you have, $500,000 and you're getting 1%. Okay, that's interesting. Maybe you're lucky and you're getting 2%, but at the same time, you have inflation happening. So money in your bank is actually actively losing value, even at a low return rate, because inflation is currently on the higher end of things. It's higher than what the Fed targets, right? So then as you start to think about, well, how do we steward what we have while we have it until we need to spend it down? That's where this income can be really interesting. We have a client who's a museum, children's museum, and they actually got a $2 million grant, right? And they were like, all right, we're building this over the next 18 months. But if we steward it in a certain way, and we helped them through a low risk, like conservative strategy, but they were able to make enough money on the grant money before they needed to disperse it down, that they were able to fund a whole different project from stewarding it well. And so that's where we have to keep in mind that we can also diversify in that way. And of course, you have government contracts and grants and things like that. I was just looking at Rachel's comment again. She said there's also an expectation for nonprofits to have the same outcomes with a gift amount from a donor that hasn't changed in 20 years. Oh, such a good call out. We've probably had that. If you're lucky enough to have a donor, her example is like, hey, $50,000 in 2006 went a lot further than it does in 2026. And so we're thinking about, how do we always frame it in a way where we can create legacy, where we can steward funds in a way where they are increasing in value to keep the impact the same. So great call out. All right. We got through reserves, financial management, thinking about tiers and diversifying revenue. Endowments is something that, just buckle in, right? It's not for everybody, but we do tend to think that it should be a little bit more approachable than most nonprofit leaders consider. So let's dive into it a little bit. First, all right, what is an endowment? An endowment, shouldn't be considered until we have a healthy reserve fund, and we're thinking in like 5 and 10-year cycles, right? But they are the most beautiful story to tell because they build sustainability and legacy. And most generous donors want to give to endowments, right? So an endowment is a gift that they give one time that you take, you invest it, and then you're taking that residual income that from stewarding those funds, you're taking that disbursement. Generally, it's 4 to 5%. And then all of a sudden, that is money that you are not starting from zero every single year, right? You're already starting with funds. If you have a $1 million endowment, which yes, endowments can be $1 million, they can be any size. $1 million is a lot of money. In the endowment world, it's almost nothing, but it's still going to kick off $50,000 roughly every year for decades and then even generations to come. That's pretty meaningful. How happy would you be if you could start every year off knowing you could start with a $50,000 gift, right? A $10 million endowment is going to give off $500,000 a year, roughly. And all of a sudden, you can start building this framework of thinking, can endowments work for us, even if they aren't billions of dollars, right? The most obvious benefits for endowments, right? A reliable funding source, right? So that's that consistent annual income stream that I was talking about. You can attract larger gifts, and I've got some data on that a little bit later. But really, when you're looking at having an endowment, even if it's a quasi endowment, we'll talk about that. But it signals long-term vision, right? It's like, oh, if a donor wants to give in that way, it's why big gifts keep going to universities and hospitals, right? They have all mastered endowments. But then what happens is the small to mid-sized organizations don't pursue those types of gifts because they think they're too little for it, or they're living in that scarcity mindset and they can't think long term. But a donor wants to give a legacy gift in that way. They want to give to an endowment. Remember, it's a gift they give one time that can live for generations to come. And so what donors do is they're like, well, these orgs don't want that gift, or they're too little, or they can't take it. So we'll write them a little check. And then the big gifts go to the bigger institutions. And then the big nonprofits stay big, the little nonprofits stay little, and we're kind of stuck in this. So a lot of this conversation today is we want to help bridge that gap and just say, hey, let's live in this strategy place and make it a little bit more homier and warmer and have us understand it so we can push into these other types of giving. So those donor legacies, right? It's a gift they give once and it outlives for them. And remember, you can start at any type of size, particularly with quasi endowments. Okay. Speaking of quasi endowments, here's an endowment tree. There are lots of types of endowments. If you immediately are like, no, endowments, don't want it. I talked to somebody this morning. My board never wants an endowment, will never want to do it. I was like, okay, right? And again, it's not for everybody, but I was like, can I ask why? Right? And a lot of us is because we think about a true restricted endowment. That means it is an endowment that has a designation, right? It's restricted, it's put aside, it's what Harvard has. Well, guess what? Harvard knows exactly what Harvard's going to be doing 100 years from now, right? Universities do. Small to mid-sized organizations sometimes are like, well, we don't know. Like, how do we start thinking 10 years, 50 years, 100 years ahead, right? And this is where quasi endowments become really important. And it's something that we do a lot at Infinite Giving is we help establish quasi endowments. But if you kind of go through, you have true endowments, right? Which is what I'm just saying is that restricted, where if anything happens to the organization, it doesn't matter. That fund of money is for that purpose and you can't touch it otherwise. You can also have a quasi endowment. And that is when it is essentially an endowment that is not created by a donor. It's created by the nonprofit organization. Often it's seeded with excess reserve funds, right? Again, because we want to work through the process of reserve funds before we think long-term. But if you have excess reserve funds, you can also often seed a quasi endowment. Ultimately, what that means is it's an endowment that gives you some flexibility. You're able to direct funds into it. It's a longer term strategy. You're investing it with the goal of pulling a disbursement off. It's a protected fund of money. It's going to live for decades and decades. But generally, you have a little bit of a loophole because it's a quasi endowment, or a board restricted endowment is another word for that. And generally, we're writing the terms in a way that says, hey, under extenuating circumstances, if the needs of the nonprofit change with a full board vote, you have the ability under extreme circumstances to access those funds as long as they're used to move the mission of the organization forward. And all of a sudden you can breathe a little bit. You're like, oh, so if your nonprofit shuts down, but you have a quasi or board restricted endowment, that's okay. You can still deploy funds. It's not locked up. You don't lose access. You can give it to another organization that's similarly mission minded. There's a lot of flexibility in that. Term endowments are where it's restricted for a certain set of years, maybe 10 years, and then you can buy it down. And of course, micro endowments just mean a smaller endowment size. There's a lot of different questions we could get into endowments. Feel free to drop them in the chat if you would like to, and I can try to address them. They're very complex, but we want to go high level. So on that section, I think just knowing that there is some flexibility in how we want to talk about endowments, how we want to think about legacy giving, and kind of where those funds go and how we capture it, because there are a lot of different moving trends on the giving side. So some of that is right here, right? Y'all have heard about the great wealth transfer, right? Or if you haven't, you should, because there's a lot going on right now. Really, the big vision is that about 124 trillion, yes, trillion with a T, in wealth is transferring by 2048. And that's going from like generation to generation. 18 trillion of that is projected to go to charity, which is really significant. Now, here's what's really fun. 40 to 70%, and yes, that's a variable of a data point. It's a little bit hard to track, but 40 to 70% of total legacy dollars go to a formal endowment or long-term restricted fund, aka a quasi-endowment. So 40 to 70% of $18 trillion that is in this part of this great wealth transfer of 124 trillion is going to go towards these types of giving. Yet most nonprofits, particularly in the small to mid-size, are not even considering, should we have one of these? And that means donors know you're not thinking that way because you're not asking about it. You're not talking about it. And if they come to you, often it's that panic of, wait, should we have that? Do we have that? No, we just want you to give. I was speaking with a nonprofit leader out in the Midwest a couple weeks ago, and he was connected. He was a referral to us at Infinite Giving, and we were talking about it. And he was like, Karen, we had a family that came to us who wanted to give us $1 million gift. And I was like, that's amazing. Congratulations. And he was like, yeah, their son had passed. They had deep ties to the community, and they wanted to create an endowment with us where these funds would serve, in their son's honor. But we turned it down. And I was like, most of you guys are cringing already, and I get it, but it was a complex conversation on their end, right? Where they were talking about it, and it was like, okay, well, we don't have endowments. We want to deploy those funds, and all of this is okay too. It makes sense where it's like, no, we want to deploy those funds. Just tell them, hey, we would love to accept that generous gift. Here's how we're going to deploy those funds. Here's everything that we're going to do with them, and the impact it's going to make. And I was like, okay, well, how did that conversation go? And he was like, well, we thought it was really reasonable and wise, but the family went and gave it to another organization who honored their wishes to create a quasi endowment with the funds. And I was like, oh no, how do you feel? And he was like, awful. That's why we're talking to you guys. We got to change our mindset. So a lot of what we're doing today is talking about, if we're going to try to work on your financial flywheel, how do we look at all these different pieces so they start to kind of build on one another, right? Because if you have a quasi endowment or a board restricted endowment in place, when those opportunities come along, you're like, wonderful. We would love for you to fund our endowment, or, hey, half of this, 40 to 70% of total legacy dollars, if you get an an unrealized a gift that it was unexpected, and you say, oh, any unexpected gift, 50% is going to go into our board restricted endowment, 50% will go to programs, right? There's a lot of different ways you can think about it. But that's what we want you to capitalize on now. And of course, the average age of a first planned gift is probably younger than most of us realize. So it's 52.8 years old, which as I get older, that seems a lot younger. And so it's not just those, folks that are more in their 70s or so, right? A lot of these types of gifts are happening in their early 50s. So as we move into what those trillions of dollars look like and where that money is held, I think it's important to note that more than 90% of donor wealth in the US is actually held in assets like stocks and even real estate, not cash. Cash is actually the smallest bucket that we have. So if you think about it, every time you're asking for a cash gift, you are asking from the smallest bucket of funds that they have. So I'm going to ask you this question, and I'm going to do the awkward wait until some folks put it in chat. But what do you think? Why does only asking for cash donations unintentionally limit generosity? I see Samantha typing, see Rachel typing. So people, yes, they keep their assets in different ways. I see Holly typing. So we think about this, and as you're thinking about why it may limit it, one of the things you want to remind yourself too is how are you asking for these types of gifts? How are you all approaching it as an organization? All right. You want to be donor friendly while serving the needs of your organization? Yes. Holly says most people don't have fully liquid assets available. Ding, ding, ding. And there's tax benefits to different vehicles of donating. Absolutely. Samantha says value is subjective. There's many ways to give, and people need to see all of their options. It's like you guys are professionals. Absolutely. So we know these things, right? When we're thinking about, all right, this is the smallest bucket of money, yet the majority of nonprofits only ask for gifts from the smallest bucket. Why do we do that, right? So the average online cash gift is $128. But gifts of assets, right, while they're less common, they tend to be much bigger. This is where a lot of those major gifts come through. So these are some of the numbers that we have. So the average stock gift, now these are more national numbers. The average national stock gift is between $7,000 and $8,000. The average crypto gift is about $10,000. The average DAF grant can be about $12,000. And of course, the average endowment, $25,000 gift or higher, right? Upwards of 7 figures plus. So when you look at all of these things and you think about the average online cash gift is 128, yet, and that's the smallest bucket of assets that donors have. How are we setting ourselves up for success, right? I think the ultimate question is you can get 62 donors at $128 online, which yes, you want those 62 donors, or you can get the equivalent of one stock donation that's averaging that $8,000. Which do you want? Right? It's kind of a trick question because of course we want all the things. We want them all. The answer is yes to both. But you have to think if you are opting out of those stock donations or crypto, right? Less common. We'll dig into those. And you're only asking for credit and debit with every ask you give. What kind of money are you leaving on the table? And what kind of giving opportunities are you consistently pursuing with the donors that you do have? Stock giving is really important because we have seen this big rise. It's risen by 136% in the last 8 years. There's multiple reasons for that: accessibility, education, knowledge, right? How easy it is to transfer things in and out, and of course, taxes, right? So stock, cryptocurrency, and even donor advised funds are the most tax efficient ways to give. The reason it's tax efficient is because you can save up to 37% in capital gains tax, right? So they actually get a double tax win where they can, they're not paying the government their, 30 to 40% in capital gains taxes. So the nonprofit gets the full amount and that donor gets that full deduction. So ultimately, and I do get this, so like, no, never mind. I don't need to do stocks. I'm just going to ask them to give it to us in cash. No. Remember the tax efficiencies, right? So like it may be easier for you if you don't have infrastructure, you don't want to bother with it, or the broker's doing something, or it's too hard to open a brokerage account. But this is a problem you want to solve if you want to get this sustainability and scaling generosity kind of flywheel going. Is you need to have the infrastructure ready, because if you're asking them for cash, then you're making them go sell the securities. Then you're having them pay 37% or so in taxes. So immediately your nonprofit's losing that percentage. So your gift is automatically smaller. And then the donor is going through all that work, paying their taxes on that, and they're getting a deduction for less because their gift is now smaller. Versus if you have the infrastructure and just enough knowledge to make it easy for them. You don't have to be an expert. You say, actually, no, did you know you can give this way? And actually, you'll save up to 37% in capital gains taxes. So would you consider giving an extra 10% to this campaign? And you'll still come out ahead, right? There's all these different ways you can frame that ask, especially when you understand those types of tax efficiencies. Dr. Russell James, again, he did this huge study of over $1 million, over 1 million nonprofits all over the US, and found that those who pursued stock gifts, in addition to cash, increased contributions by 55%. Now that was over a 5-year period, but 55% is pretty significant. Can you imagine doubling your budget in 5 years simply by making the donation of assets a greater priority? So again, we're diversifying revenue, we're increasing the different ways of giving, and just we want to share knowledge and accessibility about, hey, we are financially sound, we are thinking long term, we can accept these major gifts, we have reserves. Hey, you want to have a legacy gift, you want to give in securities? The answer is yes, right? You're able to meet those donors where they are. All right, let's get in with crypto. Here's the basics. Is it legal? Yes. Is it tax efficient? Yes. Do donors give it? Yes. I always say, especially boards, there's not a lot of people who are really comfortable with crypto. I'm like, you don't have to like it. You don't have to understand it. You don't have to believe in it. But it doesn't hurt to allow people to give to you in this way. The IRS treats cryptocurrency just like a security. So they can still save on long-term capital gains, right? They get deductions for their donation. At Infinite Giving, we're actually the only fiduciary who will touch cryptocurrency in the US for nonprofits. So you can have fiduciary oversight. You can have somebody liquidating that for you. But it is there and it is given, right? So Bitcoin is not at an all-time high right now, right? But there was a lot of value. It spiked a few times. Over $2 billion in cryptocurrency has been donated to philanthropy, right, over the lifetime of crypto as of January, a couple of years back. Over 100 million people own crypto in the US, right? So roughly 40% of the population. Crazy to think about. They're usually younger. Or it's institutional, but right, a lot of these, when we say 40% of the population, they tend to be younger, they tend to be very tech savvy. But that means there are people in your network, in your donor base, who own crypto. And as I mentioned, they still have those tax efficiencies. So it's a great opportunity there. All right, now we're going to go to donor advised funds, right? These numbers almost make me sick when I think about them. But there are 3.6 million DAF accounts in the US, and they currently hold $326 billion. So that is money that is marked for philanthropy. They've already gotten their tax deduction. These donors are generous. They've put it in the DAF. They've gotten their tax deduction. But that number is there and growing, and it's just sitting there. DAFs are great for donors. They are really tough for nonprofits because what is our side of things? We're like, great, we love that you're so generous and you have money marked for philanthropy. How do we get it? Right? Every nonprofit is like, how do we get $300 billion? Like, how do we get those funds? It's kind of hard because they're not regulated, right? There's actually bipartisan stuff that's tried to get passed in Congress and it hasn't. So there's over 300 DAF holders of institutions who hold donor advised funds. They're holding billions of dollars. There's a lot of money being made in that way, which means there's a lot of power in legislation and influence there. So currently it has not passed. And unlike foundations where you have to disperse a certain amount of money, it's highly regulated. Donor advised funds are currently not regulated. So that's why they're sitting there and they're growing. So I think actually just to go back and touch on DAFs one more time is just thinking about, man, just ask for it, right? It's like the biggest thing is a nonprofit does not want to hold a DAF. Like you don't want a DAF. Occasionally I get nonprofit leaders are like, oh, we should have a donor advice fund. No, the reason you have that is someone has that is that that's their tax deduction. They need a vehicle for a tax exempt entity. You are already a tax exempt entity. And if someone puts the money in their DAF, that does not mean you are going to get that money. The donor then has lost, like they no longer have ownership of the money. They have to make a request, right? They make a request to pull that. We're seeing people who are not leaving their donor advised funds in their wills. So when they pass, it's just absorbed by Fidelity or Schwab or Daffy or anything. They just absorb it. They don't have to distribute it because remember, it's not regulated. And so there's a lot of ways, or it's like, oh, this is great because it can grow and I can give when I want it or when I want to give out. But again, ask for it. The best way to get to these donor advised funds is to regularly have conversations. Again, when you're giving, hey, did you know you can give to us via credit, debit, all the usuals, but you can also give via stock, crypto, your donor advised fund. If you ever get into a situation where a donor is like, oh, I'd like to, can I create a donor advised fund for you? Say no, but I would love, our endowments are kind of the answer to that. No, but you know what? We would love to have you consider an endowment gift. You're getting the same tax efficiencies. You can give it direct to us. We're going to invest it. It's going to be a legacy gift and you're going to be able to see the impact and it's going to continue to grow. Same concept. One gives you control. The other one gives a third party control. So something to think about. As we look at all these different types of giving, these are questions to consider. What is best for my donor, right? And I think someone hit it. I think it was Samantha, right? Value is subjective. There's many ways to give. People need to see all of their options. As you're sitting down and having conversations, it's not just will they give, it's like, hey, there are all these different ways. And then listen, right? The best fundraisers are great listeners and they're highly curious, right? So ask questions and listen and then feel for where you can guide them. So ask yourself on behalf of the organization, well, what's best for our donors? What is best for us? How do we ask for these types of gifts, right? Are they on your website? How easy is it? Do you have the infrastructure? Are you expecting the donor to come to you? That's something to think about. Why should the donor have to come to you? You should be talking about it and asking for it and making it available. Sometimes these types of asset gifts, it's a little bit of a chicken and an egg problem, right? You're like, all right, well, I'm not doing any of that infrastructure because no one ever asked us about it, which is valid. It's one way to think about it. But right, or is it the opposite? Or are they not asking you about it because you don't feel fiscally responsible? They're not sure you're going to be around. They don't know that you can handle a large gift. You don't have the infrastructure, right? These are all these things why they may not be coming to you, right? And it's if there's a void of information, people fill it with their own assumptions. And finally, is there too much friction or not enough knowledge, right? Sometimes even the best organizations, right? It's like, well, oh, they have to email this person and then they got to go here and don't forget to do this. There's a lot of friction in how they access that giving information. Or again, you may have it because someone has some brokerage account somewhere in case you need it, but there's not knowledge for the development team, the fundraisers, the donors about how they can access that. So go through all of these questions and be asking yourself kind of as you work through the process, and it's going to give you an opportunity to improve. And as you think about these, remember in this flywheel in scaling generosity, I love this nuance. Just remind yourself, we think about them as our donors, but they're not really. They're not your donors. You are actually their source of philanthropy, right? So when your board's like, we don't want an endowment, we don't want this, or you can say, like, as a fundraiser, we don't really care about stocks, we're not getting those. Okay, but if you look through it for this framework of they're not your donors, you're their philanthropy, how are you making yourself available for their philanthropy? If they want to give in that way, if that way is helpful, if that legacy of that story I told you of that family and they wanted that legacy, that is their right. It's their treasure. It's their generosity. And if they're trying to give it to you, yes, we need things to work for our organization as well, but there is a place where you can often meet in the middle. And I think reminding ourselves of this framework is really helpful. All right. As we work through all of these things, here's your role as a leader, right? We want you to champion the cause, right? So just having this knowledge and being able to be the person in the room who says, you know what, we can plan for the future, right? A lot of you said, hey, we're in this strategy mode. We can plan for the future and we can thrive. And a lot of that education and the belief is what gives donors, your board, and your team permission, right? Permission to say, oh, yes, let's build a healthy reserve fund, not just excess, but here's why we have it. Here's the intention. Here's the goal. Here's how we're going to manage it. Right. So you have to champion like, hey, let's give as many pathways to giving as we can. Let's make sure that we're telling this story. Let's make sure that people know we're going to be here 5, 10, 20 years from now. And here's how we're thinking about that vision and that strategy. Because remember, that is what attracts a lot of these donors. The second thing is shifting the mindset, right? You want to lead that journey from scarcity to strategy to sustainability. And sometimes we may go back and forth between sustainability. Oops, we're back down to scarcity. How do we have that strategy? But as you flow through that, just understanding where you are in the process and where your goal is what helps you get there. Because organizations that move this way raise more, retain more, and they burn out less, which is so important, especially for everybody on this call. So you have to champion the cause, shift the mindset, and then you have to normalize the conversation. So talking about money builds trust with major donors, and it's a whole culture thing. We're all uncomfortable talking about money. If you're a fundraiser on here, you're like, no, this is what I do all the time, right? But it's also not just talking about philanthropy and projects, but also like understanding financial sustainability and what we should be doing as nonprofits and stewardship of those funds and how we're thinking about our legacy. So when you're talking about endowments, reserves, and regular gifts, this should be a regular part of how you talk about your mission, because mission and money are on the same side of the table, right? Like that's money. It takes money to make impact in there. And so being really familiar with not just the ask, but the channels of asking, and then the other side of stewardship of what you've been given, not just deployment, but how you're thinking about it. And that framework is all a part, should be a normal conversation, right? If you're on here, a lot of times we think about fundraising side and the financial management side, and nobody unifies those, but it's all touching the exact same thing, right? It's all these donor funds, these grant funds, right? And how we're thinking about this money can impact. So bringing those closer together, particularly for donors, is helpful. And of course, the final one is inviting donors into that legacy. So it's not just about asking them to give, right? We got to do that. We do that all the time. We always have the give now, donate now button. But just remind yourself that you're actually inviting them into something bigger, especially when we're thinking about scaling generosity and legacy gifts and that flywheel of reserves, creating sustainability, and sustainability attracting those donors. That is something that outlives them. and you're inviting them to give from their abundance, right? It's not an obligation they have, but they have abundance, and you're inviting them to give from that. So when you remember the pie with just a little bit of cash, but then all of those assets, make sure we're wherever their abundance is, right? Maybe they're volunteers and their abundance is taken, right? But we can look at where is their abundance and how are we giving them pathway and the opportunity to step into a lot of meaningful opportunity with us. So as we come to an end, one of the things I want you to think about, I would love for you to drop it in the chat. If you don't want to, that's okay, but take a moment and just write it down and just ask yourself, when we think about scaling generosity and creating that flywheel of stewardship and asset giving and bringing it all together, what is one thing that you can do to start scaling generosity for your own organization in whatever role you are, whether it's a conversation with the board, defining a emergency reserve fund, asking yourself, is it just sitting in the bank or could it be doing something more? I would love for you to take a moment and write that down. Samantha had a great one, create a guide to giving to educate your community. You can further embed a culture of giving and make the ask after they understand the possibilities of the gift. Absolutely. So everybody has one thing that they can do to start scaling generosity. And I hope that as we've kind of worked through these things and you think about, their treasures and meeting them where they are and thinking about the legacy and longevity and the wealth transfer of where all these funds are going, how we can set ourselves up to be a part of that. Mary Catherine just said, as a very new team member, and this being my first major development role, learning about the avenues that our org actually has in place. I love that. First, congrats on your new role, but thinking through, this is where a lot of us just do a basic audit, not like big financial audit, but an audit of okay, what are ways that we can receive donations? How are we talking about them? How would a donor know this, right? Sometimes we don't even know. And that happens a lot. I was actually talking to an executive director earlier today and I was like, great. He was like, oh yeah, we can receive stocks. I'm like, when's the last time you received one? He was like, I don't know. And I was like, how do you do it? And he was like, actually, I don't know. Now that I think about it, we haven't probably received one in a couple of years. Okay, that right there is your starting point, right? If you don't know, go find out. And if you don't have that, that framework, then it's an opportunity to build that framework out. And Rachel gave a good one too. Build a quasi endowment, right? You have to help leadership understand that it's not binary. A restricted fund, as people traditionally think about it, you can have flexibility. That's a great call out, Rachel. I love that one. We're just thinking about, what if we did do that? What would that do? If we did $1 million and have 50K, if we did a $5 million endowment, but had $250,000 provided every year for decades and decades to come, would that be interesting to us? What could we do with it? How would that shift? You're always going to be fundraising, but there are certain ways you can start to create a flywheel that create that generosity and that kind of longevity of financial sustainability. So whatever you have, make sure it's written down. And with that, we are coming to a close. So I appreciate everyone joining. Again, my name is Karen Houghton. I am the CEO of Infinite Giving and investment advisor. We do a lot of this. So wherever you go and however you find that partner, just know that at Infinite Giving, we are a financial partner. We exclusively serve nonprofits. We can help you receive asset gifts. So yes, we do stock, crypto, DAF, and endowment gifts. So we do from the website to the brokerage account to liquidation and receipting. We help with cash management. So we're not your bank. We don't replace your bank, but we hold capital campaigns and reserve funds, low risk, high liquidity options. And then our third and final leg of the stool that we do with receiving donations, managing cash, and then investments. So we do a lot of quasi-endowment creation, policy creation, managing endowments, things like that. So if you're not sure where to start, we do free consultations. Or of course, you can connect with us online at infiniteGiving.com. And one last little shout out is that I do have a book I mentioned in the beginning. It's called Funding Your Mission. Actually, I think I have one somewhere behind me. Actually, I think I gave it to somebody. But you can find it on Amazon, Funding Your Mission by Karen Houghton. I think it's like $12. So really affordable, but it's a great roadmap that covers a lot of what we've talked about today. That's great to give board members. Oh, look, Lauren found it. Thank you, Lauren. So that's also just a way to dig a little bit deeper into what does this look like for us? How do I educate my board? How do we talk to donors about that? So hopefully that's a great resource for you as well. Thanks again for joining us. And I hope everybody has a good rest of the week. And if we can be helpful, please let us know.